Welcome to my channel. I'm Scott, and in this video I am going to walk you through the process of valuing Marathon Digital stock by analyzing their financial statements and dissecting their financial ratios so we can determine if it's a buy or a sell. Marathon Digital is a Bitcoin mining company. According to its annual report, it mines cryptocurrencies with a focus on blockchain. Blockchain allows digital information to be distributed but not copied. That means each individual piece of data can only have one owner. The company is headquartered in Las Vegas, Nevada, and was founded in 2010. It went public in 2012 and trades on the Nasdaq, Mexican Bolsa, and Deutsche Börse. In 2011, it was engaged in exploration and development of uranium and vanadium. In 2012, it discontinued the minerals business and began to invest in real estate properties in Southern California. Later in 2012, it discontinued real estate and started an IP licensing operation. In 2017, it entered into a merger agreement with Global Bit Ventures, which is focused on mining digital assets. The following year, it terminated the agreement with GBV and gave them 3 million shares of common stock as a termination fee. Everyday people like me and you used to be able to mine Bitcoin with their laptops. As the price of Bitcoin went up, more powerful computers were needed to mine it. That is why companies like Mara were established, because it requires an extreme amount of computing power, which is very expensive. So as the price of Bitcoin keeps going up, Mara and similar companies will need to upgrade its computers or buy new computers, which will eat into the company's margins. So it may make sense just to buy Bitcoin instead of Mara, unless Mara gets into other assets. The company mined 196 Bitcoin in Q1 of this year, giving it a total of 5,134. It received 10,300 top-of-the-line Bitmain S19 Pros. This is one of the most powerful mining computers available. That gave it a total of 12,920 miners. It projects it will have over 100,000 miners by 1Q 2021. The last Bitcoin will be mined in the year 2140. This is when the last Bitcoin halving is expected to occur. The next halving will occur in 2024, then every 4 years until 2140. There can only be a maximum of 21 million Bitcoin in circulation. 18.5 million have been mined currently. The way halving works, in the year 2009, there were 21 million Bitcoin that needed to be mined. Then half of that was available by 2012, 10.5 million Bitcoin needed to be mined. Then another half in 2016, so 5.25 million still needed to be generated. Then another half by 2020. Then it keeps halving every 4 years until there's a total of 21 million. Let's get started with the model. This is a mid-cap company, 2.9 billion market cap. They're trading at $29 a share and they have 99 million shares outstanding. Let's look at the financials. The way you value a company is you estimate the free cash flows into the future, and then you discount those numbers back to today's value. That's what we're doing in this video. And free cash flow is cash flow from operations minus capital expenditures. So you can see they have negative free cash flow every year. Net income is the profit or loss on the income statement. It's revenue minus expenses. And that's negative in 18, 19, and 20, positive in the trailing 12 months. Revenue is the sales for the company, and that does grow from 2 million up to 13 million in the trailing 12 months. This is the company's income statement. The top line is the revenue, the sales. Below that is cost of revenue. These are the expenses directly related to generating the revenue. Revenue minus cost of revenue gives you your gross profit, and they have negative gross profit each year because their cost of revenue is so high because it costs so much money to generate Bitcoin. Then below that is operating expenses, and below that is operating income. They pretty much have no debt, so they don't really have interest payments on their debt. This $200,000 is the interest they received on the cash on their balance sheet. Then below that is other income and expenses, and this is why they had positive net income in the trailing 12 months, was the gain on the sale of a security. So they had positive 74 million of net income. I would focus on operating income when I look at the income statement as opposed to net income. This is the company's statement of cash flows. The top line is operating cash flow. That's how much cash the company loses from its operational business. You could think of operating cash flow as net income converted to cash, because net income is your accounting profit and loss. It's not actual cash. So you can see, even though they had positive net income in the trailing 12 months, they actually lost $10 million of cash flow. Then you have capital expenditures, which are investments in property, plant, and equipment. They spent a lot on CapEx in 2020, $83 million. Those machines are pretty expensive, and this year and next year, they're probably going to spend a lot more money in CapEx. Operating cash flow minus CapEx gives you your free cash flow, and they have negative free cash flow each year, so they fund their business with capital stock. They issued $230 million in 2020 and $560 million in the trailing 12 months. Just recently, they issued 12.5 million shares of capital stock at $20 per share, raising $250 million of financing. So every time a company issues new shares, it dilutes the current shareholders, so it makes your shares worth less. Let's look at the capital structure. They have $684 million of equity. This is mainly from all the cash and Bitcoin on their balance sheet, and they have no debt. And their WACC is 12.2%, and that's a discount rate we're going to apply to the future cash flows. We estimated 7 years of future free cash flows. We also estimated a terminal value, which is all cash flows past year 7. That's $2.7 billion. We discounted those numbers back to today using the weighted average cost of capital. We get a value of the company of $1.3 billion. We divide that by 99 million shares. And we get a calculated stock price of $13. They're trading at $29, so they're trading at 118% premium. It's a sell according to the model. Two analysts priced this stock, and the average price target was $49. Since this stock price moves with Bitcoin, in order to predict the future free cash flows, I had to predict the price of Bitcoin. I assumed they would have positive free cash flow by 2023, and I gave them a fairly conservative growth factor. This is the stock price since it started trading, so it does look like the stock price was about $150 a share. But a couple of things to keep in mind. It was never this high. They did 2 1-for-4 reverse stock splits, so the price at this point was much lower. The reverse stock split makes these numbers look really large. Also, they didn't get into Bitcoin mining until 2018, so all these numbers were for a company that did something totally different than what it's doing today. It's interesting to learn about what they did in the past, but what they did in the past is pretty much irrelevant. This is where the stock has been trading the past year. So you can see the stock price was under $1 at some points, but as you can see, the price really shot up past $50 a share, but then it's come back down to about $29. And this bottom chart is the price of Bitcoin. So you can see their stock price pretty much mimics Bitcoin's price chart. So there's not much magic when valuing this company. You just have to value Bitcoin, which of course no one can do. There are some analysts saying Bitcoin will be worth nothing in a few years. Then others are saying each coin will be worth $1 million. So the numbers are all over the place. So this is one of the most volatile stocks I've ever seen. A beta of 4.48, so the stock moves 4.5 times the market. It's really volatile. The stock has gone up 25 times in the past 52 weeks because Bitcoin has gone up so much. While the S&P 500 went up 34%, the 52-week low was 85 cents, the high was $58. And the stock is trading above its 50-day and 200-day moving average. When the 200-day moving average crosses above the 50-day moving average, that's called the death cross. That's a bearish signal. But as you know, Bitcoin has been struggling the past few months, so it's on a decline, similar to this stock. This is a really liquid stock. 13 to 19 million shares are traded each day. Of the 99 million shares outstanding, 94 million are on float. When a share is on float, that means it's available for investors like me and you to purchase. The 5 million of shares that are not on float are held by insiders and cannot be purchased. 25% of the shares are held by institutions, and almost 16% of the shares on float are shorted, so it has a pretty high short percentage. And this stock has went up a ton in the past year and the past 3 years. It is down in the past 5 years, but it was a different company 5 years ago than it is today. Analysts are projecting their earnings to grow 25%, their revenue to grow 60%, which is more than its industry and the market. In the past 5 years, their annual earnings increased 41%, while its industry only increased 13%, and the market 12%. If you invested $10,000 into this company 10 years ago, and you held on, your $10,000 would have been worth over $100,000 at one point. Then it would have been worth almost nothing at one point. But at the current prices, your $10,000 would have more than tripled to $31,000. The biggest shareholder is Vanguard at 7.5%. They're the world's largest provider of mutual funds. Then the CEO of the company owns 4.2%. Then Susquehanna, BlackRock, and Renaissance Technologies. Let's look at their financial ratios. The average PE in the market's 33, the median is 22. PE is stock price over earnings per share. To calculate earnings per share, that's net income over shares outstanding. They're at 38.9, so investors are paying $39 for $1 of earnings. But remember, the only reason they have positive net income was that large sale of the security and other income and expenses. They have a really high price to sales ratio of 222, so they don't bring in much sales relative to their market cap. And their price to book is 4.2, which is between the market median and average. They have negative EBIT, so they have negative return on invested capital, a 10.8% ROE, and they have a ton of current assets on their balance sheet relative to their current liabilities because they're sitting on a lot of Bitcoin and also a lot of cash. So this is their current assets according to Yahoo Finance, $500 million of cash and 131 million of prepaid assets. This is from their 10Q, and this gives a clearer picture of their current assets. They have 211 million of cash, and they have 291 million of Bitcoin. This is as of the first quarter, so you could probably cut these numbers in half. It's probably down to about 150 million. So Bitcoin is equivalent to cash, but cash isn't volatile. It can move up or down a lot in a matter of days or even minutes. So that's what you're investing in when you invest in this company, the Bitcoin on its balance sheet. Since they've done so many capital raises, they're well capitalized. They have 633 million of working capital, and they had negative 182 million of free cash flow. So they have $450 million of funding. The best way to look at ratios to compare them to companies in the same industry. I've done videos of 4 other companies in the same industry as Mara. And if Mara has a number in red, they're worse than the average. If they have a number in blue, they're better than the average. So they're worse in PE and price to sales. They do have a good price to book. Their current ratio is really high. They're better than average in ROE, and they have no debt. And they're the biggest company on this list at 2.9 billion market cap. So to summarize, I have them trading at a 118% premium. If you really want exposure to Bitcoin, you may be better off at buying Bitcoin. Because if you think about it, they have $684 million of equity on their balance sheet. Equity is assets minus liabilities, and their assets are mainly Bitcoin and cash. And their market cap is 2.9 billion. So their market cap is 4.2 times their equity. That's the price to book ratio I just did, market cap over equity. So you're paying 4 times the value of Bitcoin. So just buy Bitcoin. Why are you overpaying for it? Well, even though they're just mining Bitcoin today, they may get into other assets, other cryptos, so they may do other things. So you are investing in a company, not Bitcoin. So they may grow their business in different ways. But right now, you might as well just invest in Bitcoin instead of Mara. But some people are not comfortable investing in Bitcoin or do not know how, so that's why they invest in companies like this. I rank their free cash flows 1 out of 10, their revenue 3 out of 10, and their ratios 4 out of 10. So let me know what you think. Give this video a like, subscribe, or comment below. Also, if you'd like to get a custom valuation or just support the channel, you can become a member by clicking on the link in the description below. Thanks for watching.